Hi everybody, this is Jeff Chenore with the Chenore Real Estate Group. This is our monthly market recap for the month of March. Usually we give a lot of statistics here, number of houses that have been listed, number of houses that have sold, things like that. But I think what's more important and what's on my mind right now is talking a little bit about the banking industry and what's been happening. We all saw in the last 30 or so days, Silicon Valley Bank collapsed. And there's a reason for that. And also, everybody was expecting there to be ripples throughout the real estate community because, oh my gosh, banks are starting to fail again. And that's just not the case. Silicon Valley Bank collapsed because Silicon Valley Bank wasn't a federally regulated institution. In other words, the depositors who deposited money into that bank, the bank stayed below the threshold that determines whether a lending institution is governed by or has to follow FDIC regulations. Banks that are too big to fail have to follow these regulations because of Dodd-Frank when the mortgage meltdown happened back in 2008 and 2009. People started to call us when this happened and asked, oh my gosh, is the market going to collapse again? And the answer is no, it's not. That wasn't a federally insured bank that collapsed. Yes, the government is stepping in and going to make whole all of the investors who may have had accounts above that $250,000 threshold. And they're doing that as a stopgap or as a fail-safe. They're doing that because they want to insure the depositors. But they don't have to. Again, Silicon Valley Bank wasn't a federally insured bank. And so they were not a federally insured bank by choice. They actually kept the level of their deposits below the threshold that would make it mandatory that they open up their books to the federal government and that they be regulated. They didn't want to play by the rules that the government imposes on banks that are too big to fail. They stayed just below that threshold. So when Silicon Valley Bank collapsed, it had nothing to do with the real estate industry. It had nothing really to do with the mortgage industry. Yes, we've seen that the Federal Reserve has once again raised interest rates, the last time just last week by 25 basis points or 0.25%. The anticipation was that increase was going to be 0.5%. And the Fed slowed down on that or reduced the amount that they raised rates by about half because of Silicon Valley Bank, because there's so much fear out there in the borrowing world that things were going sideways again. And so in an effort to make everybody feel a little calmer, they only raised rates by 0.25 point. What does that mean for the mortgage industry, for you buying your next house? Not a lot. If you really pay attention, when the Fed raises their rates the way they've been doing for the last 9 or 10 months, yes, it has a trickle down and eventually it affects the mortgage industry, the amount that you pay for a mortgage when you buy a house. But it's not a one-on-one correlation. When the Fed raises the rate 0.25 point, doesn't mean mortgages went up 0.25 point. In fact, the last time that the Fed raised their rate 0.5 point, that same day, the mortgage rates for a home mortgage actually went down. The rate that the Fed is moving is the rate that banks pay the government to borrow money. It's not the rate you and I pay when we borrow money for a mortgage or a car or the things that we have on our credit cards. This is a rate for the federal government to charge banks to lend them money so banks have more money to lend to you and me for the things that we want to buy. So yes, houses are still selling in South Florida. Houses are still being sold. Houses are still getting listed. Some houses are even starting to expire on the market because some sellers are still just being a little too aggressive on their asking price. The bottom line is the real estate market in South Florida, the real estate market in Florida is strong and is going to remain strong. You're hearing reports of the rest of the country up north, out west, are starting to see a pullback, 2%, 3%, 4%, 5% in home value. That's not happening here in Florida. That hasn't happened, and predictions are it won't happen. Remember, we're a destination location. 1,000 people a day are moving into the state of Florida. That alone continues to keep house prices where they are and moving gently forward. The anticipation is 4% per year. Housing still remains to be one of the best investments you can make. True wealth is built by owning real estate, and everything you see happening up north is not predicted to come down here. So buy that house, list your house, sell your house, move up, move down, take a mortgage at 6%. The 3% days are gone. What we're seeing now is normal. And when you see a bank like Silicon Valley Bank collapse, understand that that is not related to the mortgage industry. The sky is not falling. If you want detailed information about your house, your neighborhood, or the market in Broward County specifically, just give us a call. We're happy to help you. And if you can, scan my code and you'll be taken to our website where you'll be able to meet the entire team. Our team is growing and we'd love a chance to speak to you about your real estate needs. I'm Jeff Chenore. I hope you were paying attention. There's not going to be a test, but this kind of stuff's interesting and you need to know. Have a great month. I'll see you next month.